All right. Good morning, everybody. Today is Friday, August 22nd. I do have some updates regarding the new market open that we were backtesting yesterday. Today will be the last day we are taking the regular market open breakout for like 100 points stop loss and 200 points TP. So today's market open is a sell. Wait. It should be US30. So market opens in about market opens in about actually wait, it's a buy. Market opens in about a minute or 30 seconds. So both of them are this is tricky. Both of them are buys. Let's see. So definitely one of them is a buy. The trend is bullish. Mm, yeah, both of them are buys. So let's see here. We might be going for the all-time high today. So both of them are buys. Buy that. Buy that. Okay, then there is the other one that we were talking about. So both of them are buys, but today will be the last day we are taking this model, and I'll tell you guys why, or I will show you guys why today is the last day to be taking this model. Yeah, but I think we might be heading up to the all-time high for today. Um, we just tested today's pre-market high. So we just tested today's pre-market high. Again, I don't trade that. Let's see. SAR and EMA wise, I really don't see any entry here. So anyway, so today's market open, buy for both the forecast and the trend. And we'll see if we can get, so we had break even for the week. So we had a win on Tuesday. We had Wednesday, we had a loss. Thursday, yesterday, we had a loss. But right, this market open entries are, what are they? They are 1:2R. So yeah, and market open for NAS today was a sell. So this is the new model I want us to be taking for market open. So today's market open for NAS was a sell. You can see the 9:30 signal was a sell, and I'll give you guys the statistics for that. For US30 today, we did not have a market open signal just as of yet. So what I would be doing, and I'll go over that again, but this is the model I want us to be taking for market open. I mean, the current one isn't bad, and I'll give you the statistics. I'll give you guys the statistics for that. It's not bad, but there are a couple of caveats to it that I really don't prefer as much, and we'll discuss them. And I guess we can discuss them right now because we don't have any SAR level currently. If we break past this, so of course, these order blocks here, they are in the way, and we've already reached we are almost at a 1:1 risk to reward. So if we break these order blocks, and I believe we will, and probably hit the all-time high. So if we break those order blocks, we should be able to hit TP. Now, this current market open that we run, and I think I have the statistics for that. This current market open where we go for a 1:2 risk to reward, and we are entering exactly on market open, either using the forecast method, which is to my left, which is just looking at where price is coming from, what order blocks is it coming from, what order blocks has it come from. Um, Between January and August, so up until yesterday, the total return was 35%. So 35% on the one to my left and 44% on the one to my right year to date. But the one to my right, which is the trend-based one, you would have blown an account. If you're risking 1% per trade, you would have blown an account sometime in February. Because in February, for this particular one to my right, it did have like 11 back-to-back losing days. Again, January and February were kind of months that are out of the norm because we know we had the swearing in of the new president, and then we know when Trump came in, there was all the talks about tariffs and all of that other things that swayed the markets one way or the other. So January and February to me were January and February to me. Give me a second here. Mm, something I'm looking at. Uh, just one second. 93. Okay. January and February to me were months that had their own differences compared to other months out there because of course of the swearing in and change of administration in the US. Now, anyway, going back to that, the model on my right, you would have, if you're risking 1% per trade on February, again, there were 11 back-to-back losing days. So I really don't like any strategy that has a lot of back-to-back losing days. As much as we have a positive risk to reward like 1:2, and even in my SAR strategies and EMA rejection scalps, I do have days where I have a losing streak, but sometimes it's not as bad as this. Now, if you're risking 1% per trade, you'd have blown your account in February. Now, if you were risking 0.5% per trade, which is what I think would be convenient for this current model, like 0.5, you wouldn't have blown an account. You'd have just been down like 5%. Now, what's that? Okay, so for the one on my left, you would have ended up passing phase one like sometime in March or something like that. Yeah, sometime in March, you would have passed your phase one because in January, you'd have been down -7%, the one on my left, and then -1%, the one on my right. And then end of February, the one on my left, you'd have been up 4%. Anyway, but point is, the one on my right, you'd have ended up blowing an account in February, and then you would have ended up blowing another account in May if you're using the one on my right. So the one on my left, you wouldn't have blown an account at any time. The only thing with the one on my left, it's purely somebody's, what is it called? It's subjective to how you interpret the market open. So it's subjective to how you interpret candle closures above or below order blocks. Now, to put that into perspective, for this current market open signal, or I'm sorry, for this current market open model, we already know that we would have blown an account in February and May using the trend-based one, which is the one on my right. And assuming we are risking 1% per trade, so as of yesterday, the one on my left would have given you 35% return. So on a 100K account, that is 35K, and that is in 8 months, right? That is in 8 months. The one on my right, you would have given you 44%, and that's 44K on a 100K account. But out of the 44K, you need to take away two 10% account drawdown limits because again you'd have blown an account twice. So actually it comes down from 44% to 24%. And again, right, when I backtest some of these things, I do it manually. So I did it, from January all the way to August, right? So that is the current market open model, which we are normally going for 100 points stop loss and 200 points TP. And we are entering exactly when the market opens. Now, there is the new model that yesterday we were testing. Yesterday we were testing. And for that particular one, I mean, the results are very, very amazing for it. And so yesterday, as you can see, right, same thing, right? January through July, I backtested pretty much every day. Now, yesterday in January, we saw that there's going to be, and this is this model right here, or this is this entry model right here. So what we are looking at, and we'll start trading this on Monday. So same as this particular one, we are looking to just take one trade a day. Like that is literally it. We are looking to take one trade a day, we're looking to go for like a 1:2 risk to reward, right? Now, there's going to be three variations to this model. Primarily, I'll be taking it for US30 right now. I will be taking it on NAS at some point, depending, because some of my prop firms, they don't allow you to take similar trades for an instrument across different accounts. You have to wait like 30 minutes or so. Now, here are the statistics for that. So just to kick it off, at no point, and with this strategy, there's going to be three entry models. So yesterday I talked about we are only looking, give me a second. For these models, we are looking to, okay. We are looking to take the first signal that comes up. Yeah, we are looking to take the first signal that comes up, the first buy or sell. And this is why, right, I like this one as well, because it gives you strict buy and sell signals. We are looking to take the first buy or sell signal that's going to show up after 9:30, so 9:30 and after. So there's three ways I will be doing this. I'll have three separate accounts. One account is going to primarily take the 9:30 a.m. signal only. So for example, today on US30, we did not have a 9:30 a.m. signal. On NAS, we did. At 9:30, we had a sell signal on NAS. But on US30, we didn't have any signal at 9:30. So for the account that I'm only taking the 9:30 signal, I'll be done for the day. Like I wouldn't be taking anything for the day. So that is the first one. Okay, the other two entries will be the first signal, regardless whether it's at 9:30 a.m. or whether it comes after 9:30 a.m. And again, this is during the 9:30 a.m. to 11 a.m. trading window or 10:59 a.m. trading window. So I've already told you guys the first one. The first one is only take entries that come up, and this again is pushing up in profit. Our position here for the market open, and let me make sure that it's copying, my trade copy is working before we proceed. All right, so looks so far so good on everything. Okay. All right, so we've already talked about 9:30 only. So if nothing comes up at 9:30, I won't be taking anything on that account. That's a 9:30 only entry account. Okay, the second one is okay. The second entry is the first signal. So same thing. All we are doing here is taking the first signal. So the first signal, regardless whether it's at 9:30 or whether it's comes at 10:40, 10:20, etc. That will be it. And let me actually think about that closely. Wait, let me think about that logic closely. So 9:30 only, and then there will be, okay, yeah. Okay, so if we don't have a 9:30 signal, and let's say the next signal comes at 10 a.m. or 10:30, that entry, I'll be taking it on two accounts. So on two separate accounts, because again, I'm looking to take the first signal, because there's a time the first signal will be at 9:30, which will line up with two accounts, and then there's a time the first signal will be post 9:30, which is going to line up on two accounts, and I'm not going to take it, of course, on the 9:30 only account. Now, the statistics for that, and again, yesterday we did backtesting on January on the live session yesterday. So on January yesterday, we saw that if you were taking the first signal, regardless whether it's a 9:30 a.m. Signal or not, you would have made 18%. You would have made 18%. For the month of January, you wouldn't have blown an account. And anyway, actually, between January all the way to yesterday, we are risking 1% per trade. At no point would you have blown an account. So at no point between January and August, as of close of trading day yesterday, you wouldn't have blown an account. So this is a strategy you can comfortably risk 1% per trade. So in January, Taking the first trade, regardless whether it's a 9:30 a.m. trade or whatnot, you would have made 18%. The account that takes that would have made 18%. And yeah, yeah. Now, on the account that's only taking the 9:30 a.m. signal. So, for example, today, if I had an account that's only taking the 9:30 a.m. signal, I wouldn't have taken any trade for US30 because on US30 we didn't have a 9:30 a.m. Signal, right? We didn't have a 9:30 a.m. signal today, so that account wouldn't have taken. Now, that account over time is going to have depending on the months. I think the month of July, most of the trades actually, most the first trade was mostly a 9:30 a.m. signal. But uh 9:30 a.m. signals are not as many, but so over time that account is going to have lesser return. So maybe that's an account you can go for a 1.5 you can risk 1.5% per trade because again you might end up taking fewer trades over time. But anyway, in January, taking the 9:30 a.m. only entry would have given you 13% gain. And then if you're taking the first signal, not including the 9:30 a.m. signal, so any signal that comes after 9:30.01, you would have been up 21% for the month of January. So on a 100K account, those three figures on a 100K account in January, we have 18%, 13%, and 21%. So you have potential of making 18,000, 13,000, 21,000. If you are risking 1.5% per trade, of course you multiply those figures by two. But anyway, I'll just run the rest of the month's figures quickly. In February, if you are taking the first trade, regardless of whether it's a 9:30 or not, you would have made 5%. If you're only taking the 9:30 a.m. signal in February, you'd have been up only 2%. So that's why I'm saying maybe the 9:30 a.m. only signal, that one you can risk 1.5% per trade. Now, if you're taking a trade, if your first trade is not including 9:30 a.m., so post 9:30 a.m., you would have been up 6% in February. And then in March, you have 8%, 5%, and break even. So again, those are the three models. I'm not going to keep repeating them for now. 8%, 5%, and break even. So break even is if you're not looking to take a 9:30 a.m. signal, in March, you'd have been break even for that account. Now in March, there was a bunch of, some losing streak of 3 days here and there, but then you recover. And again, just to reiterate this, the longest losing streak I saw while backtesting this variation of the market open entry model was in the month of was in the month of April, where there was 1, 2, 3, 4, 5, 6, 7. So a 7-day losing streak in April. So a 7-day losing streak in April. That's the longest I've seen for the 9:30 a.m. So the 9:30 a.m. entry signal, there was a 7-day losing streak. But even with the 7-day losing streak in April, if you're only taking the 9:30 a.m. signal only, so only the 9:30 a.m. signal, you'd have been up 4% in April, regardless of the 7-day losing streak. And also, you'd have been up 4% if you are taking the first signal that comes up, regardless whether it's 9:30 or not. Um, And then if you are taking a signal that is post 9:30, if you had not focused on any signal that comes up at 9:30 or not, if your first entry was anytime excluding 9:30 a.m. on in April, you'd have made 11%. May was a big month. May, if you're taking the first signal, regardless whether it's a 9:30 a.m. signal or not, you'd have been up 23% for the month of May. Again, on a 100K account, and this is one trade a day, literally one trade a day. You'd have been up 23%. So that's 23K on a 100K account, 46K on a 200K account. If you were taking the 9:30 a.m. signal only, so if you don't get a 9:30 a.m. signal, you don't take any trade. In May, you'd have made 20% because actually, most out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. Out of 22 trading days in May, only one, two, three, only 3 days were only 3 days didn't have a 9:30 a.m. signal. So that is to say, in the month of May, 18 days, 18 out of the 22 trading days in May, the first signal was a 9:30 a.m. signal. So the account that would be taking the 9:30 a.m. only signal would have made 20% in that month. Now, if you were excluding any signal that comes up at 9:30 a.m., you'd have been up 8% for the month of May. In June, 15%, 4%, 10%. In July, 20%, 6%, 3%. Again, at no time would you have blown an account. The only way you would have blown an account is maybe if you risked 1.5%, and that one you would have only blown it in. And actually, you didn't have blown it because if you are compounding month over month, you wouldn't have blown it in that month of April that we said we had. You'd have only blown it in April if you started trading that strategy using risking 1.5% per trade if you would have only started trading that strategy the day the losing streak started. But if you had started the previous months, you would have already built up a buffer that you would have survived that drawdown. But anyway, so at no time would you have blown anything. And then in August, not including today, August would have been, August was a slow month because August, as of yesterday, you'd have been up 1% if your first trade was at 9:30 a.m., regardless of if your first trade was either 9:30 or post 9:30 a.m. signal. If you're only taking a 9:30 a.m. signal, August so far you'd have been still up 1%. If you if you were taking a signal that is not including the 9:30 a.m. signal, you would have been up 5% for the month of August so far. And again, here we'll see. So we haven't gotten so today, if I was trading today this model, uh, we didn't have a 9:30 a.m. signal, so I wouldn't be looking. So one of my accounts would be zero for the day because again, we are only looking to take one trade a day. So right now, I would be waiting for the next signal that shows up, and I think at this point, the next signal might be a sell, but that might be the next one, and we can follow it once, even when it does get printed. But okay, now in total, from January to August, close of August, oh, I'm sorry, from January to August yesterday, um, if your first entry was a 9:30 a.m. signal, or how do I put this? If your first entry was including the 9:30 a.m. signal, so if you're just looking for the first signal, regardless of whether it's a 9:30 a.m. or market open signal or not, you would have been up 94%, right? Because I'm adding up 18% in January, 5% in February, 8% in March, 4% in April, 23% in May, 15% in June, 20% in July, and 1% in August. That comes to a total of 94% return. So on a 100K account, 94% is $94,000. On 200K account, 94% is what? 188, I think, 188,000. And we'll compare this to our SAR and EMA rejection scalps. Again, we'll keep trading the EMA. And again, I would consider this market open scalps because we are only going for 20 points TP, 40 points stop loss. I'm sorry, 20 points stop loss, 40 points TP. You can go for a wider TP and stop loss, especially if your prop firm doesn't allow you to hold trades for like less than X amount of time. I feel like in the long run, you'll even be more profitable because you'll probably be aiming for 1:3R, 1:4, 1:5. And on market open, it is easy to hit those R's. And again, we'll be entering these entries on the 15-second time frame. Now, 94%, you'd have had a 94% gain year to date. Now, if you were only taking the 9:30 a.m. signal, so that means if you don't get a 9:30 a.m. signal, you're done for the day. You would have made year to date 55% return. Again, on a 100K account, that's 55,000. On a 200K account, that is 110,000. Now, if on the third entry, the third model, you did not care. So you ignored any signals that came up at 9:30 and you said, I'm only going to take the first signal that comes up post 9:31. Let's say 9:31 and between 9:31 to 10:59 a.m. You would have made 64% return year to date. On a 100K account, that is 64K. On a 200K account, that is 128, I think. Anyway, 128K, something like that. Now, again, this doesn't mean that this is going to be the result going forward, but this is a summary of backtesting each and every day, similar to what we did yesterday. Yesterday, we literally backtested each and every day in January. So after the live session, I went back and backtested February, March, April, May, June, July, and recorded each and every result of each day. And again, here we are only looking to take one trade a day. One trade a day. We're going to keep trading the rejection scalps as we normally do. Nothing's going to change with those. I want to show you a comparison of the figures that we talked about. Compare that to compare that to uh, okay. Now, I did, right? At some point, I was thinking that the rejection, the SAR and EMA rejection scalp, the results were pretty good, right? Now, let's filter this by, and this is model one where we wait for the 10-point threshold, right? And our position is running in profit, right? So hopefully today we hit profit. Yesterday we came a little bit to our TP and then we had a big reversal. But today, since again it's Friday, so Friday you normally expect the continuation, a big continuation. So today I believe we should be able to hit take profit for this trade. Now, I want you guys to keep those numbers in mind, right? So we talked about 94% return, 55% return, and 64% return on three models, right? Same thing on our regular SAR and EMA rejection scalp. We normally have three models. Threshold model, we have which is where we wait for price to come 10 points past our SAR or EMA. Then the next one we do a trend model, which is where we wait for a change in the trend as price moves back to our SAR or EMA. And then the third model is where we wait for the crossover or change of structure, right? So on model one, if we filter this by 2025, which is actually the only year I've traded this model, and look at the return so far for the year, this is 23% return. And this is a 200K account. 23% return is 49,000. It's good. 49,000 is good money. Like that is good money to make in the first half of the year. I think it's the average of what or a little bit over what the regular person in the US makes a year. Now, 24% so far for the year on the Model 1 entry. Now, again, Model 1 entry, the month of July and August were a little bit here and there. Right? But you can see 23% return so far. But here we're talking about a model that beginning January all the way to yesterday, 94% return. Again, I'm not saying that these numbers will be the same. Who knows? Maybe they'll be losing money some point. But I like models that have a high win rate that's going to tell me, hey, this model has given you 94% over this year or whatever. It's like, even though you end up in a losing streak, like you still know that eventually this model is going to be big, right? And again, comparing that to the market open, the current market open model here, we know that we would have been at 35% and 24% year to date. So actually, even this current market open model is not bad as well. I mean, I can still keep marking it up for you guys, but I want to focus on this particular one here, this model right here, this market open model. But anyway, so model one, 23% for the current year or year to date. Model 2, which is where we wait for the trend change, if we filter this by year, which I think is just 2025 right now, and do return here, you can see this one is down 1% year to date. But again, this model I started trading it in July, so I don't have statistics from January. So even for the other previous model one entry, I think my first month trading it was February. But anyway, so model two, I'm down -1% return, and this is between July and August. So this is, I think, one of the models that I will replace with one of these other market open models. Now, Model 3, which is what has been uh my most profitable one, I believe, year to date because I've made 86K from it. It's been 50, about 49% return for the year. So you can see even the best, and let me make sure here we're not missing any. I hope this doesn't do, so if you guys normally trail your stop loss or put break even, you can do that. Personally, I do not. You guys remember yesterday how it did when price, what was this? I think it was this one. Price came almost to TP. We had an hourly bullish order block here. We had a reversal where price pushed up and closed above the bullish order block, and then price reversed up and hit stop loss. So just be wary of that, that it can happen the same way today where we can come down, close below this bearish. You can see we have a weekly and 4-hour bearish order blocks. So if we close below this, price can easily push back down and reverse on these positions. So again, that's why I want to go for a model that has a little bit of a tighter TP and stop loss. Um, and I did, last week or beginning of this week, we had talked about even going for a 75-point stop loss and 1500-point TP, in which case this one would have hit, I think. Yeah. But 100, 200, I think is a good sweet spot. Anyway, so let's go back here. So you can see best performing model, my best performing model of the year has given me 49% return. But here we're talking about models that year to date would have given us 94%, 55%, and 64%. So all of them, even though you just want to take the 9:30 a.m. and be done. So even though you just want to join the live session and say, okay, today do we have a 9:30 a.m. signal? Okay, we do not. You wait for the next day. You would have still been up 55% for the day. Full TP on the market open. I think we just had news maybe or something. I don't know. Full TP on the market open entry, which was today for a buy, and price is pushing. Yeah, price is pushing today. Why isn't my things updating? Great trade for the day. So we're on the way to the all-time high. You see that? We are on the way to the all-time high. Yeah, very nice returns here for the day. Wow, look at that. I think we are past the all-time high. Yeah, we've broken the all-time high. We have, oh my God, look at the chart. We've broken the all-time high by like 262 by 200 points. We have broken the all-time high. This is the trade of the week. So we are back to 2R for the week. So Tuesday we had a 2R win. Wednesday we had a 1R loss. Yesterday we had a 1R loss. So as of yesterday on the market open, we were at break even, and now we are back to 2R for the week. So, and look at that. And if we go on a higher time frame, this thing is flying. So we've broken the all-time high. So here was the all-time high at 280, and we have flown past the all-time high. But anyway, so we are back to 2R for the day. I'm not recording this market open signals like as an official or as official trades. Maybe once we start doing the others on next week. Okay, and I think we formed one for US30. Oh, we did, but it was a bit late. We formed it during news and for NAS as well. So you can see here, the market open one happened at 10 a.m. Yeah, this one would have been a little tricky to enter, but would have been a win. So today's first signal, and we missed that. And I think this one happened during news. So today during news, during the news event, we formed that buy signal. So the first signal today is a buy for US30. So we didn't have a 9:30 signal. We had a Today's first signal came up at 10 a.m. and it's for a buy. So again, this one would have won. Quick win right there. 1:2 risk to reward. And this is what I'm saying. Like if you have those prop firms that tell you, oh, you can't hold a trade for less than 1 minute, even though you went for a 1:5 risk to reward, again, this one you would have hit TP like in, because this is the 15-second chart. So 30 seconds, 45 seconds. So I know some prop firms, they say like you can't hold a trade less than 30 seconds. So if you went for, I would suggest if you have those prop firms that tell you you can't hold a trade for less than 30 seconds or 1 minute, instead of going for a 1:2 risk to reward, just do a 1:5 and then you can time yourself. And then after the 1 minute is over, hopefully you're still in profit or even in much bigger profit. And then you just exit the trade out there like that. But anyway, today's first trade, and this one would have been a tricky one because it was triggered by news. I don't know what news event this was. Let's see what we have. Oh, yeah. Fed Chair Powell is speaking. So, yeah. So today's first trade would have been a win. So, again, that pushes up the returns to 96%. Because we would have had a 2% gain for today. Today we didn't have a 9:30 a.m. signal, so the 55% would still remain as is, and then the 64% would move up to 66%. So as of today, using this model, the using this model, year to date would be 96% return by taking the first trade, regardless of whether it's a 9:30 a.m. signal or not. If you were taking the 9:30 a.m. only signal, you wouldn't have entered any trade today because there was nothing at 9:30 a.m. today. And then uh, if you were taking a signal but ignoring the 9:30 a.m. signal, you'd have been up 66% for the month. And again, just to reiterate, the highest or the best performing model for me is the structure change using the rejection scalps. And it's given me 49% between, and I think this is since February. Yeah, so since February, so 49%. Now, not to say that this current market open model is invalid. No, I'll still keep trading it, and I'll keep trading this one to my right, on just one account I have, on one trade locker account I have that I can't that doesn't allow me to copy trades. But for the others, we will be taking, I can still keep marking this one up for you guys, but I really don't want us to be missing this signal. So you see like how when I was in this chart right here, we missed this one. So if like today we were taking this model, like we would have missed this trade today, right? So I really don't want to miss any trades. So I want mostly my chart to be, and maybe I can also put it on my right side of the window, but I really don't want to be missing this charts right here. But anyway, yeah, so that's what we'll do. So beginning next week, I can keep marking this one up for you guys as well. But I want us to be focusing on this ones. Again, just one trade a day and we're done. One trade a day and we're done. And the best thing about this one is that it has built-in buy and sell labels, so you don't have to kind of start wondering. So this particular one we have to kind of check, okay, what is the trend and all of that. And especially the one on the left now, I have to keep thinking what order blocks, where is price coming from. So I have to keep thinking a little deep into it, and sometimes you can delay entering it. But this one right here, it's simple. It prints buy and sell signals on your charts. That's if it loads. Yeah, it prints the buy and sell signals on your charts. For today, I don't know if we're gonna get any SAR and EMA entries for the day. I don't think so, because you can see right here, we don't even have any supply zone. So the best thing we can get here is maybe a buy at this demand zone. But you can see this demand zone here, we have a bearish order block. So even though price comes back down into this area of demand, unless it gives a buy that's away from this order block, I wouldn't even take any trade today. So today, I don't think we'll get any trades. I mean, I can hang around for maybe till 10:30 and see how the market goes. But I think this was the trade of the week. A nice strong push, but yeah, so we'll see how this goes. I will be so for this one I'll be having the US30 chart on my the US30 chart on my left and then the Nasdaq chart on my right. I want to see something here. Oh, it's because I'd put date. See this. That push was crazy. Oh wait, because this one is still loading, so it's gonna load after. So never mind. Um, let's see. I'll probably add some challenge accounts next week for this one. But yeah, but we'll keep trading the SARs and EMA rejection scalp. There's nothing, right? I like that strategy. And overall, like that strategy is good. The reason I like this market open strategy or market open model or this revised market open model, if you remember, right, we talked about how January and February using this model were tricky months, right? A lot of back-to-back losses, etc. We also talked about how, like you can even see in my journal, the month of July and August, especially July and August, like even this week, I'm down 2K on this account. And even on the Model 1 account, which is the threshold account, the last in July, what was it? No, the last 2 weeks were tricky weeks, right? So this week I'm actually in profit for the Model 1 account. But you can see the previous week I was down 4K. The previous week again I was down 4K. The trend change one, which is Model 2. This week I'm down 4K. 2 weeks before that I was down 12K, right? Um, this current market open model has proven to be consistent across January and February, which were terrible months to take this current model, right? This current market open model. In any case, right? In January, we saw that it made 18%, 13%, and 21%. So, right, it was pretty consistent on that. In June, in July, and August has been so far the slowest, but again, we are only what? Actually, we only have one more remaining week in August. So in August so far, it's 3%. What? 3%? Because there would have been a 2% win today. 3%, 1%, and 7%. So August has been one of the slower months. So there hasn't been a losing month for this revised market open strategy. The closest to a losing month is break even, where in March you'd have been at break even if you were taking any signal that came up after 9:31. So ignoring the 9:30 a.m. signal and just taking the first one that came after 9:31 a.m., you would have ended up at break even because you'd have started the month with three back-to-back losses, then one, so you'd have been up 2 hour. Then the next 2 days, two back-to-back losing days. So you'd have been up, you'd have been losing, winning, losing, winning. So in March, it's when you would have been at break even. But I like the consistency of this one because it's proven to be consistent during the electioneering period and also that time when I know also there was, the war news of Israel and Palestine, at the beginning of the year. And then we do have summer months when, most months are consolidating during the summer. And then June, July, and August when, I did have a losing streak. So it's proven to be consistent across the board for those months. What else? What else am I thinking? The other good thing about it, so for this current market open, like the current market open, one thing about it is one big thing with it is it doesn't like consolidation because if you are in a consolidating market, And a good example is yesterday. You see what happened yesterday? Or if you are in an area that is likely to be manipulated. So since Tuesday, I've been talking about, yeah, and if you guys remember, since Tuesday, most of my entries or a good amount of my entries for market open or my analysis has been telling me we are going for the all-time high, which we actually did today. And we've actually created a new all-time high. But when you are near areas of manipulation like all-time highs or even numbers or psychological levels like 1,000, 45,000, 46,000, 40,000, you normally expect some sort of back and forth. So that's one kryptonite of this current market open model. And the reason for that is because you have a wider TP and stop loss. So most of the times, this is bound to be manipulated. Not to say that this current model won't get manipulated. In my back testing, I've seen times when price will hit stop loss and then go back all the way to TP. There are days like that. So I'm even thinking of maybe going for a 25 point stop loss and going for a 50-point TP for this market open entry. But for right now, I'll keep it at 2040 because it's working for me. And even though I go for 2550, like it would still be a 1:2 risk to reward. So in any case, I would be looking to improve my risk to reward. So maybe go for a 1:2.5 or a 1:3. So yeah, I really don't want to do like 25 point and 50, like it's still going to be a 1:2 R. So in any case, I will be looking to improve my risk to reward for this account. But yeah, so this one is pretty good. And we'll see how it goes. The other one that, and this one we can forward test in future, which again, I didn't back test this, is taking the signals between 9:30 and 11. So taking each signal. So for example, right now we would be done with the market open because, right, the 9:30 a.m. didn't show up, but then the one that came up after 9:30 a.m. was a buy and it's a win. The only 9:30 a.m. that showed up was the NASDAQ one that ended up winning. And yesterday, if you guys remember, yesterday, the market open signal for NAS was the market open signals for NAS and US30 were sells, and both of them hit TP. So we can also kind of forward test taking each signal that comes between 9:30 and 11 a.m. Because right now, what do you expect, right? Price is pushing up, right? So the next signal right here will most likely be a sell. So, and I do remember like, way back when especially price used to hit the all-time high, you keep selling and selling, but what happens? Price keeps stopping you out, so you keep getting stopped out, right? So this entry model is also a patient entry model. It doesn't give the signal until, and this pretty much is an indicator I've always had. It kind of consolidates most of my indicators and kind of comes up with the middle ground for entry. So it's something I've always had. Actually, I think it might have been my first indicator that I ever created. But right now, what we expect is we probably expect some sort of sell, a brief sell momentum before continuation to the upside. But if you entered the sell at the pre-market high, I'm sorry, if you entered the sell at the all-time high, of course, you'd have gotten stopped out. If you entered the sell here, depending on your TP and stop loss, of course, you'd have gotten stopped out. So we'll see. We'll see. I mean, I can hang around till 10:30 and then we see what the next signal is. But that's another kind of thing I had in mind, maybe to kind of take every signal that comes up between 9:30 a.m. to 11 a.m. Again, it wouldn't be on those market open signals. This would be a totally different entry on a totally different account. And maybe for this one, going for a 1:3, because again, we are we are what we are taking, and during my back test, I think at most there are like three signals. If market is moving a lot, it's like three signals that happen um, between 9:30 a.m. and 11 a.m. Now there are days where we are not going to get a signal. There are days where there won't be a 9:30 a.m. signal and there won't be a signal even before 11 a.m. So there are days where there will be zero trades to take. And we'll see that. I mean, I prefer starting new models or new strategies I mean, it's not a new strategy because I've always had this, but typically I like starting it in the beginning of a month. But this one, I'm only going to start it next week because I've backtested all the way since January. So if I didn't have the backtest data that I already have, we would have probably waited till September. But we'll start trading it next week. But you have to be right. I I pretty much have to be on the live session. That's the first thing. Or something like that. Because sometimes if I get late to the live session, we might miss out on some of this ones. But we'll see. I'll try my best to be getting on the live session like 5 minutes before market open so that we can wait and get in together. See. Mm. Alright, so let's see what the next signal will be and see. And who knows? It might not be a sell. It might be a buy. Um, so we'll see. But today, yeah, today I don't think we'll have any trades because we don't have any EMA entries. So we don't have so price has already created a new all-time high. We don't have any SARs. And even if we did, we are in an area where we don't have any zones, right? So the nearest zone was here. So this is a developing zone up here, a developing supply zone. But of course, I wouldn't trade that because it hasn't been established. So for a zone to be established, it has to go from left all the way to right. So right here, there's nothing really. And it's actually good, given the kind of price movement we're having today. There's really no need to push anything. So I'm just waiting here to see what the other signal for the day will be. And the other thing I'll do, I can automate this signal so that they are sent automatically in the group. Because I know there's still some signals that come into the Discord that are based on some of my other, yeah, that are based on some of my other strategies. I don't even remember what strategies I'd created this for. So I can automate it so that this market open signals get sent to the Discord. Only thing for that, so it's a 15-second time frame signal, and so you have to be quick with it, right? So that's the other part. You have to be quick with it since it's a 15-second signal. And sometimes I know there might be some latency to it. So we'll see. I can automate it since it definitely has the buy and sell signals. But I'll probably work on that sometime next week. Excuse me. All right. All right, it's almost 10:30. If that signal, and again, I'm not taking it. I just want us to kind of follow it. So there are times when you won't get anything. So like if let's see what happened yesterday, right? We can just backtest yesterday. So if we backtest yesterday and see what signals came in. So we already know at 9:30 a.m. there was a signal for both NAS and US30. Uh, all right. Mm. All right. So at 9:30, we know that there was a sell signal for US30 would have hit TP. Okay. For the next signal that came up for US30 was a buy. It would have hit stop loss. I'm trying to send into something. Would have hit stop loss. The next one would have hit TP. You see, and again, when I create models or when I'm looking for models, you want to see buys at the lows and sells at the highs. That is what gives you or shows you what a good indicator is, and also what a good model is. Because like if you start seeing, buys at the highs and sells at the lows, you really don't want to, focus on that model. So if you're even though you're using my indicators, look for the ones or look for the settings or variations that gives you buys at the highs and sells at the lows, and then from there build your own trading model. Like literally that's what I do, and then backtest it for the previous year, and then once you have those statistics, then you should be good. So yesterday, so let's assume we were taking every signal that comes up after market open up until 11 a.m. And again, this is maybe another strategy to do, right? And this is not going to be every day, of course, right? There are days when definitely there are not going to be any entries or you're going to have zero entries. Okay. So yesterday, since 9:30, would have been up 2 hour, lost 1 hour, gained 2 hour. So 2 minus 1 is 1, plus 2 is 3, plus 2, 5, minus 1, 4. So yesterday, you'd have been up 4% if you were risking 1% per trade. But this is what I'll say. If you want to take multiple trades in a day, so if you want to take every trade that comes up between 9:30 and 11, risk 0.5% per trade. So kind of like what I'm doing or kind of like what we do with the official trade. Risk 0.5% per trade, because if you did that like yesterday, you'd have been up 2%. Because if you start risking 1% per trade and then now you're taking 4 trades a day, not even, because not every day will you get 4 trades a day, but 4 trades this day, 3 trades the other day. Some, if you get into a losing streak, you can easily compromise your account. So of course you do not want that. So let's see this. Let's do the same for NAS yesterday. So NAS yesterday, of course, we know the market open was for, let me clear this out. No, never mind now. Keep it in. NAS yesterday, we know that market open was a sell, so you'd have been up 2%. Let me not even use 1%. So let's assume your goal is to take every trade that comes up with me on the live session between 9:30 and 11. So I would recommend take 0.5% risk per trade. So you do here, you'd have gained 1% on market open. You gain another 1% here. You gain another 1% here. NAS was actually fire yesterday. You gain another 1% yesterday. So that's 3%. Then you would have lost here, if I'm not wrong. No, actually, you wouldn't have lost. You'd have won. Let's see. Let's play this. Yeah, you'd have won 1%. So yesterday on NAS, 1, 2, 3, 4. So you would have been up 4% by risking 0.5% per trade on each trade on NAS. And I like that, right? So this is literally how I develop models. It's like I ask myself, what if I can do this? What if I can do this? And then I just backtest it. Sometimes a good amount of times I backtest like, the whole of the year. But these are good statistics right here. Like just by going for a 1:2R, you can see, and again, right, you can see some of these moves as heavy moves. You can even shoot for a 1:3R in order to cover you even more. But you can see this is pretty neat right here. So we'll see how this goes. I will automate this. I can have it send in the Discord. Yeah, I can have the signals come to the Discord, and then that way you guys can kind of see them, so that if I'm late to the live session, you can just look for that signal and then you can enter it. But yeah, this is pretty neat. So I'm definitely looking forward to it. Again, nothing's gonna change. We're going to still keep trading, and my trading view is frozen. We are going to keep trading the SAR and EMA rejection scalps as is. The only thing is just that we are adding a variation to the market open entry, and that should be it. So no other signal has shown up. Oh, never mind. Actually, wait. No, that one is different. Sometimes when you're backtesting some of these strategies, they mess up the indicator settings. Because I know these ones weren't there before. So and also it depends on volatility. So since I need to rewire these settings because sometimes when you back tests, sometimes when you back tests, yeah, because on my other chart it doesn't have anything. Yeah, so since I went back, it messed up the calculations. But on the live chart, on my live chart, it doesn't have that entry. So anyway, so these are some of the, and I know we've seen the same thing on the EMA. The EMA, this EMA indicator here, like if you backtest the EMAs, it kind of messes it up because, like, if you go back in time, the EMA really isn't there because the EMA is always a moving target. But anyway, other than that, today was a good trading day for this one. So we'll see how it goes next week. I will work on automating some of these signals so that they get delivered um, to the Discord signals channel here. And then that way, even though I'm late to the live session, you guys can still have access to it. And actually, now is when we are forming the first signal. So this is actually the first signal after. So ignore this one because during backtest, this one is the calculations messed up. So this one is the one that I would have actually taken. And remember when I was saying that it might actually be a buy, so it is a buy. So even for US30, and you guys can see this one formed real time, right? So, and you see how quick it hit TP. There we go. Yeah, so ignore this one. This one is an anomaly because I back tested. So this one shouldn't be there. But you can see this one just formed during like right now. And even the NAS one just formed right now. So this is what we'll be doing. So on US30, today we would have been up what? Today we would have been up 2R. Yeah, because we would have risked 0.5% per trade. So we would have won. So ignore this cell right here because again, this one was got messed up because of the backtest feature or the whatever it's called. Uh, got messed up because of even this one got messed up as well. Anyway, um, let me see. Where was this by? Oh yeah, no, this one is here. Yeah. And I know here, okay, the reason, and I think I understand why this one came up. So if you remember when we were looking at this 15-second chart, there was a gap in price because price pushed up here. So there was actually a gap here. So if you kind of watch this live session back, you'll notice that there was a gap here. So I think the gap just filled. So that's why I had this one all the way up here because this is where the gap had closed or the gap had opened. But anyway, so typically the entry would have been here. So whether it was here, looks like if it was here, this position might have gotten stopped out. But since there was a gap, I think I'd marked it up here. But anyway, so if we are going with the initial markup of what price had shown, this one would have been a 1R gain. Ignore this one because this one just got messed up because of the back tests, like when I replayed the chart. And then this one came up in real time, right? So this buy signal came up in real time and it went straight to TP. And then the NAS one is still running. You can see the NAS position is still running. So 20 points stop loss, 40 points TP. So NAS position would still be running as well. So this is pretty neat. And again, I'm not taking anything here. I'm not in any of these trades. We're just looking at kind of like what I just talked about. What if we decide, hey, we'll take every signal that shows up between 9:30 and 11, right? Maybe I need a new account to do that. So we'll see. But I think this one I would rather automate it. Because knowing myself, I'll probably miss some of these trades. So let's see if Nas would hit TP here. And then we just call it a day. Um, and touch base again next week. This is exciting. I mean, this is the beauty with, definitely the beauty of trading. And also, I normally insist, I normally insist that, I normally insist anytime in trading, even if you're profitable, like it's always good to kind of look more and see, okay, how can I improve my strategy or what other strategies are out there, right? Like for example, um, like for example, I thought that the SAR and EMA rejection scalps were profitable, right? Because I was like, oh, wait, this Model 3 has given me what? This year, I'm like, okay, the Model 3 has given me 86K this year. But if I was trading, like if we had a journal of all of these trades I backtested, and this is a 200K account, right? So I'm like, okay, if we had a journal of this 200K account with this market open entry that I'm showing here, you know what this figure would be? This figure would be on one account, it would be $188,000 profit or 94% return. The other one would be $110,000 profit or 55% return. Actually, wait, no, 96, no, 96, what's 96 times 2 would be 194, I think 100, yeah, $194,000 in profit. The other one would be $110,000 profit. The other one would be $132,000 profit. So as much as I'm like, oh, I'm doing really well with the SARs, with the EMA rejection scalps, and I think that, oh, hey, and making $86,000 in 8 months, that's a lot, right? That is good. But it's like, hey, you never know what else is out there. You never know, maybe, and again, this particular indicator here I have, it's literally it was one of my first, if not the first indicator I ever developed, but it's a strategy we've gone over time and time again. And I think it's a trend-based strategy, which is different from, yeah, I think it's a trend strategy, which is different from, and there you go, Nas as well would have hit TP. It's a trend-based strategy, which is different from the rejection or counter trend strategy. So remember, our SAR and EMA strategy or models are counter trend. So they are rejection or reversal patterns. This one looks to be more of a trend pattern, if I'm not wrong. So this one is more of a trend pattern strategy. So, it goes to show like you can be like, okay, this strategy is making me 50K, and then you be comfortable with that. But then it's like you have access to other strategies. It doesn't even have to be mine. It can be other strategies out there. But there's a strategy out there that can be like, can make your 50K be like a third of the profit of what he would give you. So I think that's one thing that I always, even try to push to people around me. It's like, and it doesn't have to be trading. Like it can be something else in life. It's like as much as never be comfortable in life. Like look for something else. Because I remember when I found this rejection scalp strategy, and I was like, oh, hey, this is giving me 20K a month, this amount of whatever a month or 10K a month here or whatever. And I'm like, oh, wait, 10K a month is a lot, right? But then now you have a strategy that's now looking that it's going to give you that 10K a month consistently or the 20K a month consistently. Because as much as you can see, this Model 3 so far has given me 86K for the year. You can see there are weeks I have losing weeks, right? There are definitely weeks I have losing weeks, and overall losing months. So for example, this month so far might end up being a losing month for this particular strategy. Now, it doesn't mean that I won't have a losing month or we won't have a losing month for this strategy, right? We will, maybe, most likely we will, right? But so far, I haven't seen a losing month since January of this year. Um, Are we going to have losing weeks? Definitely. We're going to have losing weeks because, again, I've said that even in my back testing, there are days where you'll have three back to back or even 5 or 7 back to back losing days. But eventually, right, the win rate is high enough such that we are profitable. So, beginning next week, I'll work on automating these signals so that they get sent out in the Discord. I think I still have some Telegram groups that also receive these signals. So, I'll work on those two. And then we'll start taking these trades next week. On Monday, we are not going to have a live session. Yeah, on Monday, I think the next live session will be Tuesday. So on Monday, if I have automated them in the Discord, just look out for them. They'll be called Market Open. So it'll be called like US30 Market Open something. So US30 Market Open. Yeah, US30 Market Open. Just pay attention to the time. Any signal that comes up at 9:30, that is the 9:30 a.m. market open buy, right? Any signal that comes up after 9:30, that is of course post 9:30. So there are times when you won't get a 9:30 signal. There are times when you'll get a 9:30 signal and other signals after 9:30. There's times when there won't be a 9:30 a.m. signal, but there will be other signals after then. And then there'll be times where there are no signals at all for the day. But just pay attention. The time frame to trade this is between 9:30 to 11. But other than that, today was an amazing. This is definitely the trade of the week. Today was an amazing, amazing trading day, and I will catch you guys here next week. Enjoy the rest of your